As we are traders, yeah, we are scalper own type of trading asset, right? Gold, currency pairs, or crypto, or stocks. And my my type of trading is scalping. So 90% of failure in trading is not on the chart, but in how you manage your capital and emotions. And today we're building the armor that protects your account. All right. And we will learn from Bukowski. I guess that you already know his name. Bukowski is a very famous trader in the world and who is already statistically proved that survival is priority number one, profit is secondary. And if you usually watch my live stream on YouTube, this lesson I usually remind, yeah, it's not a whole lesson. When we enter the real trading, the live trading together, I always remind you about how to adjust the appropriate trading volume and how you enter the trade with the suitable position. Okay, and how we move to the break even, how we move stop loss to break even, or how we divide the trading volume to each position, to each entry. Okay, so that's just the reminder for risk management and emotional discipline lesson. Okay. And when you join in this financial market, first thing you need to learn how to protect your capital first, protect your money first, reserve it, and after that, we earn money. Okay, so that's just the first step. Don't jump it in the beginning. And this market is not for anyone who is hurry and greedy. Okay. And our foundations is the goal is to survive to 20 to 30 consecutive losing trades. Regarding to the rule, the familiar rule for position sizing, this is about 1 to 2% rule, right? 1 to 2%. So its meaning is never risk more than 2% of your total capital on any single trade. Remember this. Okay, never risk more than 2% of your total capital on any single trade. Okay, so let's go back. When you open the trading account, live trading account, your broker will allow you to set the leverage, right? The leverage. And you can choose one of them. There's a lot of many options. And even when one option is 1 to infinity. So they allows you to trade with any type, any volumes. Yeah, any amount of volumes. But the market is not always followed to your correct analysis at one time and immediately, right? It's moved up and down like the ocean wave. Okay, so if you are greedy and enter one signal with the hope that to earn money as you can from your small capital, because the broker allows you to level up, yeah, to increase your trading volume, right? But if you overuse it and you increase your trading volume unreasonable, it's gonna be kill your trading account. So that's why, according to the many researchers, and they found this similar, yeah, the general number is that never risk more than 2% of your total capital. So this is the example for you. Too easy to imagine for this contest. If you have $10,000 account, the maximum risk per trade is only $200. Okay, $200. That's just the 2%, 1 to 2% rule. And if you are not, your emotion cannot take to this number, to this amount of money. You can decrease. Yeah, you can decrease to your trading volume to a lower one. And by using MT5 trading platform, you can easily be calculated. Yeah, for the loss and profit when you set order on your trading platform on the mobile phone. So the trading volume for 10,000 account, $10,000 account, normally it's from 0.5. Yeah, less than, equal, less than 0.5. That is the suitable number for you to follow this one. Okay, equal or less than 0.5. Because when you enter one trade, when you enter one trade and the stop loss level, I usually set for you on every scalping signal. Yeah, most of the scalping signal. It usually is 50 pips. And if you trade one entry with 0.1. And when the price moving with 50 pips, which is you are loss or take profit to $50. Okay. So if you 5 times multiple it to 5 times, it's gonna be $250 for one entry zone. Yeah, for one entry and for one order. Okay. And if this go beyond to this rule, lower your trading volume. Because I'm sure that you are never enter one signal, one order, one layer for one signal. We shouldn't. We never do that because for the entry zone, okay, there's a lot of level for the entry, right? Because we call it a zone. So we need to divide the trading volume into the appropriate rate. If you calculate, this is the most appropriate trading volume total. Okay, total. I would like to press to this one. This is gonna be total trading volume for one signal. All right, less than or equal to 0.4. And if you enter many layers, okay, you should divide it into 0.1 or 0.05. It depends to your decision, okay, and your favorite. I know that somebody they will like to enter a lot of layers when you enter in one signal, okay? As long as you do. Just remember, if your total account is $10,000, the total trading volume for one signal should be less than or equal to 0.4. Okay? And you can calculate this rate. Yeah, this number. How is your appropriate trading volume with your trading account? Okay, and if your trading account is less than $500, just use 0.01. Yeah, 0.01 to 0.05. Yeah, for one entry. Okay, because from here we have the formula. Yeah, formula to calculate the profit and loss. We have pips, multi, lot, multi, 10. 10 is a cost. Yeah, 10 is a cost. And pips is the changing pips. Okay, it's sometimes it's follow to your direction. Yeah, follow to your analysis. It will be the plus pips. Okay, and if it's go against, yeah, and hit the stop loss, it's gonna be the minus moving pips. Okay, and from this entry zone, we have from this trading volume, like I just gave you the example, 0.1 volume. Okay, so you can use this formula. Pips, 50 pips, right? 50 pips moving. Multiple, 0.1, multi, 10, and we have $50. Okay. And for one trade, usually the risk reward ratio is around at least 1 to 1, 1 to 1, right? And when we gain around 50 pips profit, you can set the break even, or you can move to the higher level of the stop loss, like from minus 50 pips to minus 30 pips, something like that. And it depends to your hobby when you trade. Okay. And anyway, for any traders, especially gold trader, we should remember this formula to calculate pips and loss. Yeah, and if you're trading on the MT5, yeah, this trading platform, these applications will automatically calculate the total amount of money for you when you place order. And it cannot use on an MT4. So that's why I prefer trading on MT5 trading platform. Okay, so this is the experience I want to share with you about the 1 to 2% rule and how you can calculate yourself, yeah, by yourself for the profit and loss. Okay, so to be proactive, let everyone be proactive and do not wait. We do not have to wait for anything or anyone for this one, because this is the basic knowledge for any traders when they when they trade. Yeah, when they trade to the forex and gold market or other metal. Yeah, metal or oil. They will use the same formula to calculate the profit and loss. And now let's move to the next part. It will be about the placing stop loss by technical logic. Okay, and this one, yeah, because you are my VIP members, and for the stop loss, I already indicate on every scalping signal, right? And this is when I follow the ratio, okay? And it's also have another way for you to set the stop loss. This is about observing the pattern, okay? The pattern, and you will start the stop loss at the lower lows or lower or higher highs. Okay, it depends to the pattern that the market is forming. But for me, I found that placing the stop loss with risk and reward ratio is more reasonable and effective for every trader. Because sometimes if you depends to the pattern, yeah, you have to set the stop loss very far from your entry zone. And if the signal is unlucky, you will lose a lot, and it will be harmful, yeah, to your trading emotion. Okay, so just follow risk reward ratios is the best one for every trader to set the stop loss level. Yeah, so that's it, just very briefly about the placing stop loss by technical logic. And the next one is about the capital preservation. which is usually called moving to break even. Yeah, familiar to you, right? Yeah, preservation. Moving to break even, like I just shared with you, when the profit, when the profit we get around 30 to 50 pips, you can move your stop loss to the entry zone. And this is the action that will protect your account. And your trading psychology is is calmer, right? It's calmer. And you will feel less pressure when you do any trading, right? And this locks in zero risk, allowing you to breathe a sigh of relief and eliminate psychology pressure. So that is the target of moving to break even. So that's why when you enter any trade, and there will be some delay when I post the message on our VIP signal on Telegram. Okay, so if you decide to enter any scalping signal, let's let's pay let's spend a few minutes, okay, to check your mobile phone frequently, because every scalping signal sometimes is gonna be moving quickly. Yeah, and for this time, we cannot know that in the Asian session or London session or New York session, when it's moving, once the market is moving with high volatility, now we don't know. Yeah, now we cannot identify the exact one. So if you enter any signal, yeah, open your trading account and put it in front of your face, okay, and observe the movement of the price. And of course, I always check the chart and update immediately for the result on Telegram channel on our VIP signal group. But it's gonna be having a delay 1 to 3 seconds. Okay, so for 1 second the markets can moving differently. Yeah, in the opposite direction. So I would like to receive your kind understanding. Yeah, because of the delay of the speed when transfer the message. Yeah, so I always want to update immediately, urgently to you when our signal having a profit or having the result. Okay, so the solution for this is I would like to calm your attention to your trading platforms so that you can proactive to manage your order. Okay. So that is the best solution to avoid the delay. Okay, so for the next part, I will share you some tips, yeah, about how to solve for the psychology trap. We were talking about the psychology trap. This is always happened, right? Because our brain are not set up for trading. We are human and we need working. We need to work, right? We need to produce something. Okay, so trading is the modern type of invest. Okay, so our brain need to update every day and need to practice to get acquainted to trading. So that's why sometimes the market, especially the sharks, the big players, easily manipulated the market and they will cause you the FOMO feeling, okay, and control our behavior, which usually happens for the herd behavior. Okay. And that is one of the psychological traps. And they are easily to falling for that. If you observe the gold price from July, yeah, from July to October, yeah, to the middle of the October, you will see that gold price increases steadily. Yeah, it's always making a very powerful uptrend. Okay, and this time, if you're FOMO, that is a good way for you to make profit. But sometimes, if the price retraces deeply, yeah, like this candle, so that time it will make you loss. Yeah, in case you do not discipline to set the stop loss level, like I usually share with you. Okay, but for those months, these are for the period that gold in a very powerful uptrend, right? But when the price heading to 34.77 one time is collapse, right? It's collapse, and after that, gold recover. But you see, it just happened in a short term, right? And once again, the market reject its bullish momentum. And any traders, yeah, having a buy position here, we don't know when they're gonna be equal to the trading result, right? So, and this pattern is also forming the double top pattern. Yeah, the chart is also forming a double top pattern, and this is a confirmation of the market that gold price reverses. Yeah, they reverses already, and now gold is changing and is facing with the accumulating period, and now we can see that it's having a downtrend here, a slight downtrend here. Okay, so that is very easy for the big players to manipulate our FOMO feeling. And with forming a herd behavior, we just we just buying. And we expected it's gonna be break to $4,500 level because we usually read the newspapers, right? On the website, on the newspaper, on the magazine, the reporters, yeah, and the journalists will be FOMO. Yeah, will write. They would write the title. Yeah, for the expectations of gold reaching 5,000 at the end of 2025, and those report, is also pushed to your FOMO feeling, and that's why we get the psychological trap. Besides observing the trading chart. Okay, so if we see any news, we must, we must check to the actual situation and the chart as well. Okay, and yeah, obviously you see that double top patterns is established, and now gold is accumulating for long time, for nearly 2 weeks, and now all the candlesticks, and even when in the big time frame, even in big time frame, you see it's having a bullish reaction, but we don't know when they can be breakout to and conquer the previous peak, previous resistance, to make the higher highs. Okay, so if you hear any news about the market, especially the news is supporting for the current momentum of the market, be aware of it. Don't fall to the psychological traps that they are set it and waiting for you. Okay. Now wait a minute. I need to adjust the structure. Okay. The format of this content. Oh, it's disappeared. What happened? What happened? Okay, there is it. And if the day that the market is challenging, right? No one, even though the best trader in the world, they cannot guarantee with you 100% winning rate for every scalping signal. Okay, so if we have a blue day, okay, in case that we have a blue day, the market do not follow our analysis. Yeah, it's always hit the stop loss we set for every signal. Set yourself the daily loss limit. Okay, so the first solutions is set the daily loss limit or the quantity of the maximum trade for a day. And the number I would like to recommend you is the maximum 3 days or stop trading if you hit a 4% daily loss limit, which is if two signal. Yeah, which is if two signal hit your stop loss and it's already reached to 4% daily loss limit, you should take a rest. And we will coming back when you are calmer. Okay, when you are calmer and your psychology is more stable. And then you decide to come back to fight to the market. Okay? And when you decide to trade in the beginning of the day or any time, we should set the maximum trade for a day or daily loss limit. Okay, so this is the first solution to avoid the psychology trap. Relating to the confirmation bias. Confirmation bias. Before I set a scalping signal for you, there will be 3 questions. Yeah, 3 reasons. 3 questions that I usually set for myself. Why do I set up this signal? Okay, and how many conditions that confluence together for me to set up that signal? And what I will do if the signal is failed. So that is the 3 common questions for me that I usually set for myself before I start to set up any scalping signal and post it to our VIP signal group. Okay, and I hope that you can practice to ask yourself, before entering, always ask for those relative questions. And these are the suggest one. Okay. This one will help you have a clear mindset and be more wide awake when you set up any scalping signal, Okay. So this is about the confirmation bias. We need to be wide awake. Okay. And this is the thing I want you to prevent. Never having the random trade. Never have the random trade. When you just open your trading platform, you open the MT5 and you see that, oh, the market is having a powerful bearish candle. I must sell now. But you forgot that you are observing the chart in the 5-minute time frame or 1-minute time frame. And you don't know that it's going to be heading to a very strong support level of the weekly time frame. And then you hit to the sell button. Okay, and you know what's going to be happen, right? So before entering a trade or entering any signal, you set up. Sometimes it's going to be fast because you're just open your trading account and oh wow, you see very strong bearish or bullish candle. Sometimes the engulfing candle will cause you a FOMO feeling, yeah, FOMO emotion. I definitely that feeling for you because I have been through. Yeah, when I just starting my trading career, that is how I made a mistake. One of the action, yeah, that I just made, and it's also make me lost money. I know that the market is very endure for us, right? Especially for the bearish or bullish powerful candlestick is forming on the chart, especially in the one smaller time frame. Never too overconfident. When you just observe in 1 or 5 minute time frame to enter a trade immediately. And you forget to observe any bigger time frame, the daily, the weekly, or 4 hour or 1 hour time frame. So that's why we need to be calm and be patient. Remember for the step to practice. Before entering a trade, we should ask ourselves a few questions to prepare the psychology in advance for any mistake, yeah, any failure is gonna be happen. To well prepare for the worst situations can happen. Okay? And yeah, I'm here to remind you for this experience to this lesson. If you actually that is not too complicated. They are very simple. Yeah, for the technical analysis, sometimes it's very complicated for us to remember and understand, right? But for psychology control method, if you hear, it's very normal. It's very simple. Everyone can do that. Okay, I understand. It's so easy. I can do it. I'm confident can do it. But when you open the chart, right, and you see the price is moving and you are confident. Okay, so that is when for me to enter a trade, buy trade or sell trade immediately right now or not. Or if not, I will miss this opportunity to increase my profit, right? So that is when you losing your discipline. And bingo, you get to the psychology trap from the market, made it for you. Okay, so just practice and be calm. Keep calm to the speed, to the movement of the market. Okay? And definitely you will become a successful trader when you are acquainted, yeah, and graduated from this lesson. Okay? And from yourself. From yourself is the best, is the most important thing. Okay? And the last one, yeah, emotional and discipline, fear and greed. Okay, so this part is like I just share with you the story. Yeah, and how I experienced with my severe history. Yeah, severe history. Okay, stick to the plan. Solutions here is you should stick to the plan. Stick to the plan. Okay. Make the entry decisions with logic. Set the stop loss and take profit and let the market conclude the trade according to your rules. Do not interfere while the trade is running. Okay? This is very important. As we are scalpers, we trade in a smaller time frame, like 5 minutes or 30 minutes. But if you're swing traders, you set up a trade in a 1 hour time frame. Yeah, by using the pattern and you set the stop loss and take profit already. But you usually observe the chart and the change of money at your trade. at your trade on your trading platform will make you are not stable. Yeah, will make your mind is not stable at all. So if you decide to become a swing trader, you should keep your body, your mindset, be calm to any movement of the market. And my tips for you is you less checking your trade part on your trading result. Yeah, trading history on your trading platform. Just observe a chart. It's okay. And don't look at the money. Don't look at the money is moving. Okay. It will prevent you from interfering to your signal. All right. Yeah, and this is the final part of today's lesson. So, like I just shared with you that in the beginning of our lesson, that today's lesson is very simple and it's not too complicated for everyone to understand, right? Okay, so if you have any questions, feel free to leave at the chat box and I will reply to you.